Hey everyone, Friday was the monthly options expiration for the month of October. Let's take a look at where the market might be heading according to the gamma exposure data. For the SPY, here we're looking at SPY closed at 584.59 on Friday. The 585 strike here, which is the largest gamma exposure concentration, that was tagged 3 days last week. It was tagged on Monday, Wednesday, and multiple times on Friday. Usually when we see this many tags this close together, that tends to indicate bullish momentum, and eventually this resistance zone has a high probability of breaking to the upside. And the gamma exposure data is basically confirming that. We've seen gamma exposure growing at the 590 strike, as well as the 595 and the 600 strike. Now, a lot of people might say there's no way we can make it up to 600, in the next couple of weeks. But really, if you think about it, that's only a 2.5% move from where we are trading right now. So that is totally within the realm of possibilities. The election is coming up. Market participants do seem to be fairly bullish, expecting a potentially a Trump win, and the expectation is that would be good for markets. That remains to be seen. However, the gamma exposure structure is basically confirming that outlook. Market participants are already piling into this 590 strike, like I mentioned before. Now, this is a dealer cluster zone, and these tend to be resistance zones on the upside as we see price trend into these levels. But remember, one of the factors that we analyze to consider whether there's going to be continuation or a rejection at these dealer cluster levels is how does the gamma exposure picture look above the largest concentration. So if we see gamma growing at these higher levels, that shifts the probabilities to an upside continuation. And what we often see is the dealer cluster zone increasing to higher strike prices. That looks to be the case heading into Monday, possibly Tuesday. We could see this dealer cluster zone here shift higher to the 590 strike. Let's just take a step back and look at the weekly performance for the S&P 500. This is a heat map, and you can see over the past week, the market is broadly been positive. Basically, every single sector on here is largely green, except for energy and healthcare. For the most part, healthcare was a little mixed, and tech services was a little mixed as well. But what needed to be outperforming were the big dogs, and they were definitely outperforming. Apple, Nvidia, almost all of the financials as well had great earnings reports. We had a little softness in Microsoft, Google, and Meta, but that's basically a flat move over the week. And so as long as the picture remains like this, if we see kind of a flat to slightly upside move in the big dog stocks like Apple, Nvidia, Google, Microsoft, Meta, as long as those stay flat to just slightly positive, I think the rest of the market, the rest of these sectors that are outperforming will continue to lift markets higher. And in another scenario, if these big dog stocks really start taking off, boy, watch out. I mean, we could be at 600 this coming week on the SPY. So something to definitely watch. I like to break down these market sectors just to get a more granular picture to see what is actually happening under the hood of the market. That brings us to small caps. Small caps, relative underperformer over the past several years compared to the rest of the market. However, IWM is at a really interesting point here, technically speaking. Just going back to July, we could see multiple tags here right around the 225 level. And here we are again. This is buyers coming in. This is supply, winning in these battle zones here. But however, the more times that price comes up against these battle zones, like we see here at the large gamma exposure concentration, has been hovering around 225 and 226. And so this is basically signaling to us that IWM is continuing to see big buying interest, and eventually all these sellers that are here at this level will be exhausted. And so a breakout above this level into these GEX levels here that are at 230 and 235, those would be our next targets. So we're watching these key levels. A breakout above this zone could be an interesting play for a longer term strategy. We've actually been talking about a couple of ideas in our community Discord. I'll put a link in the description below for you guys to check that out. And I was mentioning earlier, we need to see the large mega cap stocks at least remaining flat. They don't have to be the leaders in the market, but they need to at least remain flat while the rest of the market, like IWM, the mid caps, while they play catch up and break out of their near term resistance levels. And the reason being is because even if you just take a look at the top 5 companies, this is 25% of the S&P 500. Apple, Nvidia, Microsoft, Amazon, Meta. You add all these up, they're a 25% weighting of the S&P 500 components. You got to at least have these big mega cap stock companies treading water while the small and mid cap stocks break out. So that brings us to a few specific names that we've been watching for the last several weeks very closely. Nvidia, of course, one of those names. We've been highlighting this 140 strike really for the past couple of weeks. The gamma exposure concentration at this level has been so strong. You see, we've tagged it several times last week, closing the week at 138. Interestingly enough, though, after the action last week, market participants are continuing to pile into higher strikes. The 150 strike is now the largest gamma exposure concentration. That's our upper dealer cluster zone. That's going to be our target heading into November. We may see a little pullback back down into this 135 level. Fill this recent gap right here. That would be an interesting long entry point for long strategies. Put credit spreads, call debit spreads, out of the money iron flies, things like that. We'll be looking at some of those plays if we get any kind of dip here in Nvidia, and that would be for a move back up into this 150 strike, probably targeting the November 15th expiration. Another one of the mega cap stocks we're watching very closely is Apple. Apple closing around 235 as of Friday. You can see multiple resistance zones here. This resistance zone is around the 233 level, and then we see here another resistance zone just over the last week at the 235 level. So really 233 to 235 has been this resistance zone going back to end of summer. The gamma exposure picture is painting a positive bullish scenario. Market participants positioning between 235 and 250 for more upside potential. Our target for the near term for a move in Apple would be the 240 strike, which is the largest gamma exposure concentration here, and our dealer cluster. So that would be our first target for any move above this 235 strike. Amazon, another one we'll be watching. Similar pattern to the rest of these mega caps. You know, we see multiple attempts here at breaking out around certain levels. For Amazon, it's the 190 to 195 zone. I think another move above this 190 strike, we'll see Amazon rocket into the 200 strike, which is the largest gamma exposure concentration here. So that's definitely going to be one that we are watching this week as well. Another name we'll be watching very closely is Netflix. Netflix had earnings Thursday after the market closed. Market participants really liked the earnings report. Netflix came and traded right into this largest gamma exposure concentration at 750. We typically stay away from earnings plays when it comes to option strategies, just because it's such a binary event. A lot of times we'll see these large gamma exposure concentrations, and that's basically a reflection of the market anticipating a price target. Of course, earnings can surprise either to the upside or the downside, so these targets don't always get hit. The edge really isn't in our favor from a probabilistic standpoint, and so we tend to wait until earnings has played out. In the case of Netflix, market participants got rewarded for whoever was positioning at this 750 strike. And now we see people continuing to pile into higher strikes. The 800 strike is now the next target for market participants. So the way we're playing this is likely waiting for some sort of pullback or consolidation in this 750 zone. I'd like to see it personally. I'd like to see it pull back at least until this level, maybe around 730, 735, and then enter for another leg higher back up to that 800 strike. That might take some time to play out. Again, you know, you're hoping that things work out in your favor so you can get a decent entry point. That doesn't always happen. So I do want to give the possibility for just maybe a few days of consolidation around the 750. That could also offer an interesting risk reward entry point for a move higher. Another name I'm watching on my list is Shopify. Shopify has really had a nice move since this summer, trading from the 50, 60 range all the way up into the mid 80s as of this past week. The largest gamma exposure concentration is at 85, and we see market participants continuing to come in at these higher strikes. So my first target, I think, as long as the market continues to behave itself, first target would be in the next week or two would be hitting this 85 strike. Beyond that would be subsequent moves into the 90 to 100 range, probably into the November or December expirations. That, I think, would be an interesting move. Shopify has the ability to really rocket higher or collapse lower, depending on the situation. And the current situation is showing market participants are very bullish on Shopify. Don't forget, you can access our gamma exposure dashboard and options analytics tool. Head on over to geeksoffinance.com. You can join and become a member. You'll also get access to our community Discord. We have a ton of traders in there sharing ideas and market analysis every single day. Link in the description below. Definitely come on in and say hi. Thanks so much, everybody, for watching. We'll see you guys in the next video.